Hey, what's going on, guys? Thanks for tuning back in, and if you're new, make sure you hit that subscribe button so that way you can check out weekly posts on personal wealth management and market insights. My name is Ash, certified financial planner, bringing you the knowledge, perspective, and resources from my world to help you live a better financial life. So on today's market insight video, I just want to mourn the losses of every freaking stock that I own. Holy shit, last week was a bloodbath. It was incredible. It was jam-packed with election news, rising COVID cases, earnings reports. Oh, and apparently these guys won a World Series. But today, what I want to highlight are the conversations around some of these key events that contributed to those crazy swings. And I'm going to break it down into three topics: big tech, stimulus 2.0, and the election. Starting with big tech, one of the causes of the major swing was because of earnings results and also future guidance by Facebook, Amazon, Microsoft, and Google. Apple in particular reported slowing revenue growth as COVID impacted supply and demand for products. And Microsoft also experienced a revenue slowdown, but their cloud business remains robust as f. That segment is up 38% from the previous quarter. But in even bigger news, last Wednesday, lawmakers grilled CEOs from Twitter, Facebook, and Google, mostly my guy Jack, and it made me uncomfortable to watch.
Who the hell elected you? And why do you persist in behaving as a Democratic super PAC?
Basically, the reason for the testimony is to address that these tech companies have become the internet police, as they have the power to control and limit what information is spread across their multi-billion user platforms. And that's concerning because that censorship actually affects our First Amendment right, the freedom of speech. Both Democratic and Republican lawmakers inquired a lot about their censorship process, approval, and a major concern a lot of senators had: how do these companies stay politically neutral? That's a great question with Election Day coming up, and I hope you voted. Another area of the conversation during the testimony was on Section 230, which is basically a law that was written back in 1996 that says this, which pretty much says that anyone that uses these platforms and posts on any media outlet is the publisher and speaker of that information. And here's the kicker: the platform company itself, in these cases Facebook, Twitter, and Google, are not liable for any of the information posted, no matter how damaging, misleading, etc. Sounds pretty scary, right? Considering the reach that these companies do have, they really do impact every facet of our lives, from personal to business to leisure. In my opinion, this law was written during a time where a lot of people thought that the internet was a fad. So any sensible person would agree that Section 230 does need some reform. Because the reality is, as much as we love our freedom of speech and expressing our views and thoughts, we can all agree that there are some people out there that do so with malintent to hurt others. Radical groups, domestic and abroad, are a concern, and I personally appreciate these companies doing their due diligence from allowing these conversations to spread on their platform. But what does this ultimately mean? I think regardless of who gets elected, there is going to be more pressure on big tech companies regarding these issues, and we will most likely see some form of legislation that is going to impact these tech companies and the way they conduct their business, and also hold them more accountable for user content, which in turn affects us, as we can potentially see more government-esque oversight on some of these platforms. Big Brother's watching. Speaking of government, what the hell is taking them so long for our stimulus checks? The last round of stimulus to go around was back in March, and 8 months later, the economy is kind of still in the bipartisan leaders have been working on a stimulus 2.0, but they cannot seem to get shit together and push the funds out already, mostly because they cannot agree on how much and where to provide aid. To my bank account, Senator McConnell. It is believed that the second stimulus is going to be larger in size, with potentially up to $6,000 per eligible family, in addition to infuse banks with lending capital for small businesses. This conversation is really pressing markets, as much needed cash is critical to help this depressed economy. It is likely that we won't see a stimulus package until after the election, and worst case scenario, until next year, which any economist can tell you is a really bad idea. So fingers crossed, hopefully officials can put their political agendas aside and get Americans their much needed dough. Oh, and really quick, before we dive into the election, news that hit the markets hard this week were the rising COVID cases around the world. The US topped almost 100,000 cases in a single day, and many European countries are struggling with the second wave of the virus, proving to be much worse than the first. France, Spain, Italy, and Germany imposed new shelter-in-place mandates, many of which are more strict than the first initial wave restrictions. This news spooked investors as a potential second lockdown could be in sight for the US as cases surge here. Colder weather, more people indoors, and businesses opening back up can spell for a devastating flu season. Many analysts, however, do not predict another nationwide economic shutdown, but there could be some states that reimpose restrictions that were set when the pandemic started. So we'll see how it plays out. Lastly, let's talk about the election. We are literally days away, and the markets are throwing a temper tantrum. Historically, leading up to an election, markets are relatively calm. So last week was definitely a rogue event. There's a ton of data out there that potentially predicts the outcome of the US election based on market movements, but if you ask me, it's a bunch of bull. Last election allegedly had a Hillary win priced in, but we all know what happened. Ultimately, there is nothing certain in the world of finance and politics. But a couple of things that we can guarantee that the new or renewed president will have on their agenda is going to be vaccine development and controlling the spread of the virus, a broad stimulus package, and efforts on economic recovery. Me personally, I think 2021 is going to be a phenomenal year for markets regardless of who's in office. We just have to get over a couple of hurdles like the election and controlling the virus first. Don't worry, there is light at the end of the tunnel, and oh my gosh, I'm so excited for my first vacation. I don't know when it's going to be, not sure when I'm going to be comfortable enough to go with all this virus stuff happening, but all I know is, first up, Puerto Rico. I appreciate you all tuning in, and be sure to like this video to support the channel, and don't forget to subscribe. I'm pushing out weekly videos like this and also on personal wealth management, so if you know anybody that can benefit from these conversations, please be sure to share. Thanks for tapping in. My name is Ash. I'll catch you guys next time.